Welcome to the Travelex Weekly Outlook. The dollar got off to a slightly better start to the first week of June, the week of June 6th. This is coming as we've seen risk sentiment pull back a bit. U.S. jobs data from the previous week knocked investor sentiment down. That weighed on stocks and commodities. So that helped to lift a broad class of safer assets. Still, we have seen the dollar generally on the defensive. In fact, it's at one-month lows overall. And this is on signs of a slowing U.S. economy, which suggests that Fed policy will remain ultra steady for an even longer period of time. So that tends to tarnish the appeal of the dollar. And this is coming as many central banks around the world are at least thinking about raising interest rates. So that does put dollar-based assets at a disadvantage. Last week, though, we did see a steady procession of weak U.S. data. In fact, that culminated with Friday's weaker than expected non-farm payrolls reports. The U.S. economy tacked on the least number of jobs in 8 months for the month of May. There were other surveys throughout the week that showed that the weakness in the economy wasn't limited to the employment picture. For one, we saw consumer confidence fall to its lowest level in 6 months. We saw another survey on manufacturing activity that grew at its coolest pace in nearly 2 years. So that suggests that Fed policy is likely going to remain ultra loose and really unappealing to investors that are hungry for higher yields for the foreseeable future. And that also can slam the door shut to the prospect of a U.S. rate increase sometime during the year 2011. In fact, now many forecasters are bracing for a U.S. rate hike sometime deeper into the year 2012. So again, that does put U.S. interest rates at a disadvantage. Just a few months ago, back in April, the ECB, they raised interest rates for the first time in nearly 3 years. They brought rates up to 1.25%. In fact, the ECB meets later on this week on Thursday. They're not expected to touch policy this time around, but they could sow the seeds of an eventual rate increase sometime in the months ahead, perhaps even as soon as July. So that does stand in stark contrast to U.S. interest rates that are steady near record low levels. Something else the outlook for steady interest rate does, that leaves the U.S. currency vulnerable as a funding currency for investors that want to take out loans to fund bets in higher yielding currencies such as the euro and the Australian dollar. That tends to put the dollar at a distinct disadvantage. Compounding dollar weakness, last week we saw easing concerns about Europe's sovereign debt crisis. In fact, the latest word is that Greece might be in line to receive a second bailout package somewhere in the line of hundreds of billions of euro. That is something that can further ease concerns about Greece's funding situation. But for now, that's generally seen as a broader bandage on what's going on over there in Greece. In fact, at this point, investors don't think that more aid to Greece would be a long-term would serve as a long-term fix to what's going on over there. Consequently, I think more money for Greece that might only prove to be a short-term solution to the crisis. Nonetheless, it can help put a lid on Greece's debt troubles. It can also help prevent the spreading of a broader crisis throughout the Eurozone states. So that is seen as generally as supportive to the single currency. For the first week of June, June 6th, it's going to be fairly light on U.S. data. So that suggests that last week's weaker than expected jobs data might have a residual impact on the U.S. currency. For the data that are due out, we're going to look at the Fed's gauge of regional economic conditions across its dozen districts. That's called the Fed Beige Book. That is a Wednesday survey. And then on Thursday, with the latest on weekly jobless claims, also the latest trade numbers as well. And then throughout this week, we have a host of we have a host of central bank meetings. That's going to kick off on Tuesday with the Reserve Bank of Australia. They're seen holding a rate steady. But like I mentioned, we're going to have the big focus. That's going to be on Thursday. We'll see if the ECB, as expected, leaves rates steady and see whether or not they can lay the groundwork for an eventual rate increase. Some of the other central banks that meet this week include the Bank of England. They're going to meet on Thursday, as well as the New Zealand Central Bank. That's going to do it for this week. Thanks for checking us out. For more on the dollar, feel free to check us out on the website.